Some of the indicators are lagging indicators like MACD, RSI, moving average. They are all lagging indicators. But there are some indicators which are leading indicators. Leading indicators are the one which you get one day prior uh, to the trading day. Pivots are one such indicator. With the help of the yesterday's value, we can calculate what will be the levels for tomorrow. So Camarilla pivot is one of them. People use many types of pivots, CPRs, pivot standards, Fibonacci, but I found Camarilla pivot is to be one of the most useful pivot. So we will discuss that today. Hello, now coming to the history of Camarilla pivots. Camarilla pivot was invented by Nick Scott in 1989. It's a Spanish word. Uh, it is called as group of secret advisors. Now you can consider that the various resistance and support level given by the Camarilla pivot can be considered as secret advisor for you. Now, what are the features of Camarilla pivots? See, it is a leading indicator, first of all. It gives support and resistance levels. How is it calculated? It is calculated based on today, high, low, and close. We can plot this one day before the trade starts. It also gives target based on the pivots level. See, these are the formula for Camarilla pivots. I will not go into the details of these Camarilla formulas. The only thing I would like to say is range is nothing but high minus low of the previous day. What are the components of Camarilla pivots? See, the main components of the pivots are, first of all, the resistance, and this is the resistance R3 and S3. This is the main component. Based on this only, other components will come into picture. This R3 and S3 are the mean reversion levels, whereas R4 and S4 is the last line of resistance and last line of support, beyond which you can take a directional trade towards the upside or a directional trade towards the downside. R5 and S5 are the targets for breakout and breakdown respectively. Now, there are two setups for Camarilla pivots. Basically, one is the range bound setup or the reversal setup, and the other is the breakout setup. We will discuss both of these setups. So let us start with the reversal setup. See, you have to check whether the stock indices is an uptrend or downtrend for the past 2 days. That is very important. Whether R3 and S3 is located at any specific resistance oblique support level. Generally, and especially I would like to tell you, like 45,000, 44,000, these round figures are generally, act as a very tough resistance or support level, or at any point where the breakout or breakdown has happened also act as a strong support and resistance level. And second important aspect you have to consider is what is the candlestick pattern which is forming at these reversal levels, that is R3 and S3 levels, for a bearish trade or for a bullish trade. The reversal level at the R3 may be a shooting star, and at the S3 may be a hanging man. It can be an engulfing pattern, or it can also be a bullish or bearish inside bar. Bullish inside bar at the S3 and bearish inside bar at the R3 levels. See, any candle formed which is below the reversal candle which is happening at either S3 or R3 will be a good entry point with a stop loss above the high or low of the reversal candle. Stop loss will always be above or below the R4 oblique S4. Now, if the reversal candle setup is formed in higher time frame, it is much more beneficial to you and your analysis will be much more accurate. Also, this reversal setup works better if the previous days are trending days. Generally, it is in common sense. If the previous 2 3 days are trending days, generally the third day will be a range bound day. Also, you can take an additional confirmation if today's R3 and S3 is inside yesterday's high oblique low, then also you will generally find a reversal, a very good reversal setup. Coming to the bullish oblique bearish setup, how to come out with the bullish oblique bearish setup? See, now you have to understand and check whether the stock is in uptrend or downtrend, as in the case of a reversal setup. Now it is to be understood that R4 and S4 are the major support and resistance level. Hence, the stock or indices may touch these levels many times before giving a breakout or a breakdown. So don't jump in whenever a first breakout takes place or first breakdown happens. Wait for a confirmation before the breakout happens. Like one candle has taken, first candle has taken a breakout. Wait for a pullback, and then when the next candle or next two, third or fourth candle breaks the high or the low, then only you enter. Secondly, previous day's trading activity is also an indication day. Same in the case of the reversal setup. If the previous 2 3 days have been a ranging day, generally you will find a breakout or weak breakdown the next day. Now coming to the pivot width analysis. See, pivot width analysis is very important. Uh, what are the factors we should consider for accessing pivot width analysis? See, we should know whether R3 and S3 is within prior days range. If it is within prior days range, any breakout above R3 or breakdown below S3 will give you generally a good breakout trade. Now these are, and see, I have compiled in the form of a table, higher value, various relationship between the previous day pivot, that is Camarilla pivot, and today's Camarilla pivot, in order to take an informed decision. So I'm not going to go into the details of this, but what we can do is I've taken real life examples of these, setups, and we will discuss that setup one at a time. You can read this, table when you in details when you are leisurely, and you can tally that with whatever I have explained in the subsequent slides. Okay. Now, what are inside layers? See, inside layers is in the first slide when I explained Camarilla pivot, we discussed only R5, R4 and R3, and S3, S4 and S5. We did not discuss R1 and R2 and S1 and S2. But these four pivots come into picture only in the whenever the indices are in a ranging or a reversal setup, and also when the distance between R3 and S3 is quite wide. Suppose if we take the bank nifty, you can consider that if R3 and S3 difference is around 300 points, so generally you can consider that day is going to be a ranging day, and we can use activate R1 R2 and S1 S2 to get a better reversal setup. Now let us understand various setups which I have discussed in the previous table. The first is the higher value relationship. So let us understand what is a higher value relationship. In higher value relationship, today's R3 and S3, this is R3, this is S3, and is higher than yesterday's R3 and S3. It means the R3 and S3 of today sits above the R3 of yesterday. So this is this higher value relationship. Okay. Now, what are the conditions possible in this higher value relationship? These conditions and setups is based on the opening of the market. That is, if the bank nifty is where it starts opening. Let us consider the first situation where the bank nifty opens above R3. See, this has opened above R3, right? Now, the first condition is if it opens above R3, any pullback and breakout above the high of the opening will be considered as a buying opportunity provided it breaks above R4. Okay. Now, suppose if the opening is between R3 and S3, okay, opening between R3 and S3, then any pullback to S3 will be a very good buying opportunity for a target of R3 and also for a target of R4. Now the third situation is, what if the market opens above R4? Above R4, I have already told you, will be a last line of resistance. So hence it is going to be very sketchy here and choppy, and once the breakout happens, then only enter. Don't enter at the first go. If the market opens below S3, let us gaps down below S3. In that case, any pullback to S3 will be a selling opportunity for a target of S4 and S5. However, let us assume the market opens below S4. Then any pullback to S3, wait for a pullback to S3 and then go for a sell. You can get S4 as well as S5 as the target. So this is the higher value relationship and the conditions which you have to consider before taking trade. Now the next is overlapping higher value. Okay, what is overlapping higher value? It is very simple. You don't have to get too much bothered. See, this is today's R3 and S3. You have already calculated it. Okay, based on the yesterday's high, low, and close, you have already calculated today and you have marked this. Okay, let us assume forget about all this today. Okay, you have already marked it. Now overlapping means here you can see the R3 and S3 is not completely above R3. S3 is in between R3 and S3 of the previous day. So there is an overlap here. You can see the overlap. That is all. This overlap can be here or here, wherever it can be. This line can be anywhere in between these two. Then it is called as an overlapping higher value relationship. More the overlap, less is the bullishness or mild bullishness will be there. If the overlap is very less, then there is going to be better bullishness. Now again, there are 3-4 situations in this. Suppose let us assume overlapping relationship. If we consider this, it is bullish, very bullish, because the difference between the overlap is not very much, very slight. But however, what happened here, we will explain. We will explain situation number 1. If the opening is above R3, here any pullback to R3 will be a buying opportunity. Okay. Now, if the opening is between R3 and S3, okay, any pullback to S3 will be a good buying opportunity for a target of R3 and R4. Now, if the opening is below S3, now we had considered a overlapping higher value means we have considered it as bullish. However, what has happened in this case, if you see, it has opened below S3. Okay, so now whenever it opens below S3, any pullback to S3 will be a selling opportunity. Okay, you can see n number of examples. If you take out the chart from Zerodha or anywhere, trading view or anywhere, you can see n number of this thing. I have taken it from Bank Nifty. It's available everywhere. Okay, see here, any pullback, see opening has been done below S3, so it has pulled back here. It could not break S3 1 2 3 4 5 times. Now it came down. It got a fantastic risk reward ratio. It did not touch S5, but however it crossed below S4, and this is good enough to get a good risk reward ratio. Here it formed a base and then it again reverted back to S4, but that is not this rally should not be considered. Only this breakdown can again be sold into to get a good risk reward ratio. So we have explained all the conditions in the overlapping higher value relation. That is when the market opens above, when the market opens between R3 and S3, and the market opens below S3. Okay. Now we'll see the next one. Now here, this is the lower value. This is just the opposite of the higher value relationship. I am not going to explain everything in detail. The situation is the same. See here what has happened. This is today's R3 and S3. It has opened below R3 and S3 of yesterday. That is, it is even below S3. Okay. Now this is lower value because there is no overlapping. Here what is the condition? If the market opens above R3, first condition, please listen carefully. If the market opens above R3, any breakout of R4 will be a buying opportunity for a target of R5. So condition 1 finished. Now condition 2. If the market opens between R3 and S3, see this is the condition here. It has opened, market is opened here between R3 and S3. Any pullback to R3 will be a selling opportunity. Can you see here? It first pullback, it came down and gradually it went down. So in this case, in a lower value relationship, any move by the indice towards R3 will be a selling opportunity. The third condition is if the market opens below S3, it's a clear sell with any pullback to S3 can be sold into for a target of S4 and S5. Understood? Okay, we will go to the next value. This is the overlapping value, lower value. It is just opposite as overlapping higher value. Here what has happened? I am not going to explain everything in detail. We will go back to the previous one. You can see here the overlapping relationship. You can see today's R3 and S3 is overlapping with yesterday's R3 and S3. Now here also there will be 3-4 conditions. The first condition we are all aware, if the market opens above R3, what will you do? If the breakout happens above R4, here in this case the market has opened above R3. Okay, market has opened above R3. Okay, now you will buy only when the market crosses R4. All right, here we can see is the what if the market opens between R3 and S3. If the market opens between R3 and S3, since it is a overlapping lower value, it is going to be a bearish setup. Hence, any pullback to R3, we are going to sell. Okay. Now here in this case, sorry, this is the overlapping lower value. Sorry. Okay, there is a little, I mean, I'm not able to put the, pull this, my cursor here. There has been a slight problem, but I will explain as it is, okay. Now, you can see that, if at all the market opens between R3 and S3, any pullback will be a selling opportunity. As you can see at the end of the day, when the market pulled back to R3, it became a very good selling opportunity for the market, isn't it? Now, what will be the next situation if the market open below S3? If the market below open S3, it will be a clear sell for any pullback to S3 for a target of S4 and S5. Okay. Now, the next relationship is inside value relationship. What is inside value relationship? the today's R3 and S3 is inside the yesterday's R3 and S3. Again, we have uh, three situations, right? If the market opens above R4, see this inside value relationship works both ways. It means to say, suppose if the market opens above R4 in the inside value relationship, it is going to be a bullish day for sure. Okay, so any pullback to R3 and breakout above R4 is going to be a, you don't have to wait for the high of the day. Any pullback to R3 consolidation and breakout above R4 is going to be a breakout day. You will get a very good risk reward ratio, and you can keep a tight stop loss below R3. So that is the first condition. So let us assume if the market opens between R3 and R4. In that case, if the market is opening between R3 and R4, then the best thing that happen is that whenever a clear breakout happens above the high of the opening, then you can go for a long. That is also a very good risk reward ratio. Now let us consider the next situation, market opening between R3 and S3. If the market opens between R3 and S3, what will you do? It is a inside value relationship. The market is going to be choppy and you will not do anything, because whenever there is an inside value, always wait for a clear breakout above R4 or below S4. Don't trade in between R3 and R4, because you get chopped out and there will not be very much risk reward ratio. Now, uh, let us understand the breakout play of Camarilla pivots. See, in case of a breakout, that is inside value relationship, this is connected with inside value relationship. See, you have to look for any gap up or gap down. That is for a breakout, a gap up, for a gap down, for a breakdown. It should indicate, it confirms our bullishness and bearishness. Okay, as confirmed by the inside value relationship. Inside value means a breakout or breakdown is imminent, but don't trade within the range. So hence, whenever there is a gap up, then you must consider for a trending day. The prices should gap up above previous day high oblique low and above oblique below the today's R3 oblique S3. So this will be an additional condition. Suppose if the breakout happens above R4, and if the breakout happening is above the previous day's high, or the breakdown time is below below yesterday's low, your risk reward ratio will be very high. Now, however, in case of overlapping relationship, you have to consider this point very important. In case of overlapping relationship, where the trend conviction is not powerful. Okay, so I have already told, whenever there is an overlap, the trend will not be good. It will be a mild bullish or mildly bearish. So in that case, trend changes can happen very fast. So look for overlapping relations for the previous 2 days and get ready for any reversal trade. Now, coming to the outside value relationship. Now, what is an outside value? In outside value, today's R3 and S3 will be higher than yesterday's R3 and S3. It means to say R3 and S3 of yesterday will be inside R3 and S3 of today. So in that case, mostly it is going to be a range bound day, and it is going to be better if the market opens between R3 and S3. You can just sell when the market reaches R3 with a stop loss at R4 and for a target of S3. And similarly, when the market starts reaching near S3 and makes a candlestick pattern like a hammer or anything, just keep the low of the hammer as the stop loss and buy for a target of R3 or R4. This is outside value relationship. If the market opens above R4 or below S4, then any pullback to S3 or pullback to R3 will be a buying opportunity. See, I have shown this, I have not taken this condition on a chart because exact R3 and R3 of the present day and R3 of the previous day coming together is impossible. So, in an unchanged value relationship, that is yesterday's R3 oblique S3 is equal to today's R3 oblique S3, or generally they are equal, that day is going to be a range bound day. So you can sell any reversal is seen at R3 for a target of S3, and you can buy any reversal seen at S3 for a target of R3. Okay, generally these are the conditions. I have explained each and every condition possible for a relation in the Camarilla pivot relation. But please keep in mind 2 3 points. First one, that uh, the formation of candlestick patterns at the resistance oblique support level is very important. And second point, never buy whenever during the first breakout or breakdown. Wait for a pullback and wait for a reversal and then only buy. R4 and S4 are the last line of resistance and support. Hence, there will be a lot of choppiness there before the breakout happens. So, wait for an opportune moment to get a proper breakout and a breakout entry and breakdown entry. So I have explained all the conditions for Camarilla pivots. I hope you are going to like this tutorial, and I would request you to, in case if you find it good, I would request you to subscribe to my channel. Thank you very much. I would also like to say that I am not a SEBI registered analyst. This video is for educational purpose only. Please use your registered financial advisor for any trade related queries. Thank you very much.